The war on cryptocurrency has begun. Over the last few months, the United States government has started ramping up its efforts to crack down on cryptocurrency. We've seen debates start about who should be regulating cryptocurrencies, the SEC or the CFTC. We've seen the arresting of employees of NFT marketplaces like Nathaniel Chastain for insider trading. And most recently, the United States Treasury sanctioned Tornado Cash. So why are they doing this and why now? And if you stick with me, I promise you will not like the end. And I mean the end of where the government is going with this attack, not the end of the video. You get it. Ready? Let's dive in. For a while, cryptocurrency has seemed like an absolute Wild West. From all the ICOs that took place around 2017 to the recent craze with NFTs and altcoins, it has seemed like a Wild West, and there have even been massive numbers of influencers, people on social media, people with large followings and podcasts, creating coins, selling them to people who they are telling to buy them while they're currently dumping them, participating in all sorts of fraudulent activities, and yet the government has stayed largely out of all of this until now. And it looks like they are just getting started. But to understand where they're going, let's first look at what they've started over the last few months. A few months ago, there started a debate about who should be in charge of regulating cryptocurrencies. The SEC wants to do it because they say cryptocurrencies act like stocks. But some senators believe that it should go to the Commodity Futures Trading Commission, the CFTC, because cryptocurrencies to them look a lot more like commodities. And then we also saw the Department of Justice arrest somebody for insider trading of NFTs. Nathaniel Chastain worked for OpenSea, and basically what he would do is he knew which NFTs would be featured on the homepage, so he bought them ahead of time, and then once they were featured, he sold them because now that they were more in public view, they were worth a lot more, and so he was able to sometimes double, triple, and quadruple the money he spent on buying these things. And then finally, most recently, we saw the Treasury Department's OFAC, the Office of Foreign Asset Control, sanctioned Tornado Cash and about 40 Ethereum and USDC wallets. So we've got debate about who's regulating cryptocurrencies. We've got arrests taking place regarding NFTs. We have sanctions regarding this Tornado Cash. And on top of that, we also have debates about stablecoins and the White House talking about passing stablecoin rules by the end of this year. So two things are going on here. Number one, we have started to see an active push to regulate the entire cryptocurrency space more by the government. But number two, we're also seeing a lot of chaos in how this is going to be done. And to understand why, we have to take a step back and ask the question, what is a cryptocurrency? And this is actually a little bit of a difficult question to answer, which is why we're seeing so much chaos come out of the government right now on this. For instance, the Department of Justice is the one that arrested Nathaniel Chastain for insider trading. This is interesting. It was not the SEC. For instance, if we look at the insider trading case with Nathaniel Chastain from OpenSea, the charges were brought by the Department of Justice, not the SEC. The FBI assistant director in charge said that Chastain launched the age-old scheme to commit insider trading by using his knowledge of confidential information to purchase dozens of NFTs in advance of them being featured on the homepage. The funny thing about this is that insider trading, the SEC says, relates only to securities. And typically, a security is defined as something that is a fungible, negotiable financial instrument that holds some sort of monetary value. And by definition, an NFT is not fungible. However, there is precedence for this, as in the case of Howey versus SEC from 1946. The court found that the plaintiff's sale of land and agricultural services constituted an investment contract, even though there was no trace of a stock or a bond. This gave rise to the Howey Test to determine whether something counts as a security or not. Number 1, you would want to see an investment of money. Number 2, in a common enterprise. Number 3, with the expectation of profit. Number 4, to be derived from the efforts of others. Now, some people say all cryptocurrencies and NFTs and everything like that obviously constitute an investment of money, but not so fast. Because if I go buy a new iPhone, I'm not investing in Apple. I'm exchanging currency for a product that I want. So when you go buy an NFT, if you're doing it to buy the image, there's a strong case that you're not buying it to invest in it, you're buying it because you want the product. That may be right or wrong, but it's definitely not clear cut. Number 2 with the Howey test, we have in a common enterprise. So with something like a stock, this is very clear. You and a bunch of other people are investing a bunch of money in the common enterprise for this business that's supposed to go out and produce profits. With many cryptocurrencies, it also seems pretty clear cut, especially from the founders and the influencers who are pushing them. They're saying, hey, you're going to be entitled to dividends and cash is going to be deposited into your account as a result of how much you own of this, and you're going to be entitled to some of the profits from this. And they were structured very much like businesses, which would mean the cryptocurrencies, the tokens, are securities. But with a case of something like an NFT is an individual item, so there is no common enterprise. Number 3, with the expectation of profit. Now, if I go out and I buy a gold or a silver coin, a 1 ounce round, I might be doing that in order to have a profit on those because I think the price of gold or silver might go up. But those are clearly defined as commodities, so they don't fall under the banner of a security. So just the fact alone that you expect to have a profit off of the money you spent doesn't make it a security. Because of this last one, number 4, to be derived from the efforts of others. Again, clear cut with a stock because you've got a management team, an executive team that is making the decisions and running the businesses that will produce those profits. With many cryptocurrencies, you can point to some founders, a team of managers, people who are running it, trying to make the value of that thing go up. But it's not clear cut with every cryptocurrency. It definitely doesn't apply to Bitcoin, and it could potentially not apply to many NFTs. So the charges brought against Chastain for insider trading may not hold because he was buying and selling things that may not be able to be classified as securities. Now at this point, you're probably saying it doesn't matter. Fraud is fraud. It was wrong that he did it, so it's good that he got arrested. I'm not talking about morality here, though. I'm talking about the law, and I'm talking about what the rules are. However, if we listen to the OG of fraud, of securities fraud, the original, the Wolf of Wall Street, Jordan Belfort himself, recently speaking on a lot of the pump and dump schemes and a lot of influencers who were pumping coins at the same time as they were selling them, he said, every single crypto deal is now exactly what I went to jail for what all you guys do every day. The paper trail doesn't go away. There's no SEC right now regulating it, but that's a bad thing because the SEC is a civil authority. They don't throw people in jail. So if there's no SEC, that leaves only the US attorney. They're the ones that'll get involved, and when they get involved, you go to jail, which is why these charges for Chastain were brought against him from the Department of Justice and why he went to jail. But this brings up an even larger problem with definitions of these things because let's say, based on certain characteristics, you can say there are certain cryptocurrencies that qualify as securities and others that qualify as commodities. You really have to take a step back and understand what it is you're dealing with here because it's not an image, it's the blockchain. And when you boil it down, it's just information. It's ones and zeros. It's bits. It's bytes. It's computer programming. It's software. It's information. That's it. Let me give you a hypothetical example here of what I'm talking about. Let's say that I communicate to you exact instructions on how to build a gun. Let's say you take that and I say, hey, you take this block of metal and you have to cut this much out of it right here. You have to drill a hole right here. I give you every single precise instruction you need verbally to be able to cut this piece of metal out into all the pieces, size of the screws that you need, the oils, all the glues, everything that you need to make a functioning gun. If I tell you how to do that, and let's just say I even write it down and I hand that to you, is that practice protected under the Second Amendment? No, it is not protected under the Second Amendment because there was no firearm involved. I did not give you a firearm. I did not sell one to you. I did not create one. I did not bear arms. It is not protected under the Second Amendment. It's protected under the First. It's speech. It's information. What are cryptocurrencies? Let's look at Bitcoin. Bitcoin is like an Excel spreadsheet. If I have an Excel spreadsheet and I make it publicly viewable, I create the link, and as long as anybody has the link, they can view it. And on the spreadsheet in cell 1, I say, Joe owns 100% of this spreadsheet. And I say, does anybody out there want to own half of the spreadsheet with me? And somebody says yes. And I say, okay, how much will you pay me for that? And they say, here's $5. The next line on the spreadsheet, I say, now Joe and Phil each own 50% of this spreadsheet. And we just keep on going down the list, assigning ownership. And Phil then says, I don't want to own 50% of it anymore. I want to sell it. And then somebody else gives him $20 for his portion. Now I write a new line and everybody can see this. It's just information. It's just bits and bytes. It's a ledger. It's a list. That's what Bitcoin is. That's what cryptocurrencies are. That's it. But the problem is the way they're being used presents a threat to the United States government. Because at the end of the day, the only reason the government, any government, has any power is because of the purchasing power of the money it issues and the money that it spends. Because if a government wants to enforce any laws, they have to do it through people that they pay with real purchasing power. And if that purchasing power goes away and the government cannot pay anybody to do anything anymore, their power goes to zero. And so as competitors to the money that a government issues pop up, really that is a threat to the power the government has. And so to the extent that it can, it will shut them down. And so we've seen for years now, very little regulation, very little action taken by the government, and just allowed a free-for-all, allowed fraud, allowed pump and dumps, and stayed away from strong, clear legislation. And what it looks like they're doing now is cracking down to make an example of anybody who wants to use any cryptocurrency or any NFT to stay away, because they will jump through hoops and leap over fences to say, nope, that information constitutes a security. That information constitutes a commodity. Even though it's not technically qualifying as a security, we're still going to charge you for insider trading. And the sad part is most people will be on board with this because most people have lost money on these. So they're going to say, hey, that guy did a pump and dump. I lost money on that. I want the government to increase their power. I want the government to crack down on this so that that person that caused me a loss gets what's coming to them so that I don't have to feel bad about my stupid decision. And this could be an extremely effective way to virtually stop any development in the cryptocurrency space, any increase in usage of NFTs, cryptocurrencies, anything like that, to put a stop to the rise of a competitor to the dollar. So the question is, what about Bitcoin then? Well, there's a difference between enforcing a law and passing a law. If the government thought they had a chance of shutting down Bitcoin, I'm sure they would have probably at least tried by now, because Bitcoin presents a far bigger threat to the value of the dollar and the power of the government than any other altcoin does, than any NFT does, than any other crypto project. But there's nobody they can arrest. There's nobody they can freeze their assets. There's no servers they can go and lock down. There's no surface area of attack for the government to come come in and put a stop to Bitcoin. Now, people may choose to voluntarily stop using it because they're afraid of the government, but that's an entirely different thing. And at the end of the day, they're going to be introducing their own version after they've shut down every crypto they can, after they've shut down everything and arrested and made examples and put the fear of God into people. They're going to come out with their CBDC and they're going to say, we fixed it for you. We know you wanted something like this. Use this instead. And a central bank digital currency will give the central bank, the Federal Reserve, unadulterated control over the flow of money and resources in the entire economy. You no longer need legislation. You no longer need regulation. You no longer need political debates. You no longer need bureaucracy. You no longer need to rely on the banking system and the profits and losses associated with each private company. You have pure 100% unadulterated control over the entire financial system. And if you think they won't try something like that, you haven't studied history. And finally, if you're curious how Bitcoin fits into a bulletproof portfolio that's not vulnerable to all of these crazy economic times, I've got a course built just for you, linked in the description below. As always, really appreciate you guys. Thank you so much for watching. Have a great day.